emphasising more the fact that the links between business and government have been broken. You know, he is, I dare hate to call him an old school conservative, but he has a long history of being a lifelong conservative, former MP, etc., etc.
And leadership of companies that, you know, are sort of very integral parts of the British economy.
Okay.
And I want to squeeze in the story from the Telegraph as well. The headline there: China's penetrated every sector of the British economy, MPs warn.
Yes, Stephen, and this is in a report that's been...
Those are just joining us. Welcome. Good morning. Obviously, we're taking a short here on Euro Dollar. Very nice setup. Okay. So, let me go from high time frame, then we can dive into it. So, it's been on a bit of a rampage. Okay, it's broken through this local swing high, stronger swing high, and it's actually broken through this weak swing high up here. Okay, you got your much stronger swing high all the way at the top here, but again, it's Friday, not expecting that to really play out. It will continue making its way up towards that. What we're looking at just capitalizing on is just a pullback to demands, and then for it to kind of continue its move. But yeah, overall, nice setup. So you got this nice continuation here. So one. Okay, we didn't really get that there. We got one here. Okay, so we're just looking at it continuing. We're going to play it to these wicks down here. Again, we've got some more demand all the way at the bottom, but we'll see how things kind of play out as they move closer towards target. Dollar index, I'll go over Bitcoin in just a second. Dollar index has been falling for a number of days. Okay, we're seeing this slight pullback here. Got a little bit of supply here, which is also in between that gap. So that gap is going to be eventually filled up, right? Higher time frame structure. We've got this strong demand zone. Okay, we're just sitting just above it, so could be the case that, okay, we make a little bit of a pullback, come back down, and then build up on the bottom. Again, we'll see how things kind of play out. Obviously, we've been getting weaker CPI data, hence why we got that breakthrough structure just here. But again, we got interest rate decision next week, so markets are going to slightly position towards that today. But yeah, nice test. Okay, came back up, tested for supply here, and pushing back down. See whether we can break through this low, come back, well, continue coming down. Yeah, nice setup, guys. Nice setup. Okay, so crypto. Everyone's talking about crypto. Obviously, it had a nice move up. Alts were majorly up. Bitcoin dominance is down. Okay, giving, obviously indicating the strength of those altcoins picking up some of that market cap. Let's have a little look. Find that at supply.
Member FinRecipic, a registered investment advisor.
But yeah, I think the main point to take is that obviously we're at that supply zone here. Okay, we got that swing high on the daily at 32,500 roughly. So it might be the case that we make a move towards there and then start making a move back down. But again, that range is still holding. Okay, so please do bear that in mind. Don't FOMO into any other positions if you manage to get in. On the move yesterday, well done. It was a very nice move. A lot of these altcoins were up majorly. So yeah, nice. But I mean, you're seeing it here. Okay, supply dump. So we'll see how things kind of play out. It's going to be the case that more than likely to continue holding that structure until next week, until we get that interest rate decision. There's talks about the Fed continuing to, well, increase rates. Obviously, we did get weaker data this week, so kind of pushing the narrative of continuing to pause. But who knows?
Healthcare up by 0.6%. Food, beverage, and tobacco shares up by 0.5%.
Okay. Yeah, just be patient. I'm looking at a potential top at 32,500, coming up and testing that swing high and then coming right back down. If the Fed increases, it's going to be a bit of a shock to the system for risk-on assets, so we could be looking at a pullback. Also, all the equities are at some nice supply zones as well, so bear that in mind. Obviously, your equities are considered risk-on or risk assets, sorry. Okay, oil. Bit of a rampage yesterday. Okay, as you can see, we're at that 200 on the daily. Broke through the week swing high. Kind of in limbo. Okay, so again, it's Friday. Wouldn't be surprised if we make a little bit of a deeper pullback to some of these areas. Let me have a little look. We've got a stronger demand all the way at the bottom. Not sure if that's gonna come down. This is a nice area to come down and test. So maybe we come down, hold, push back up, maybe continue back down towards this area here.
Makes sense too. Now, the dollar weakness is just the flip side of that weaker inflation.
So yeah, we'll look for a potential short. Now, this is nice here. So that's probably where I'm looking for an entry to go short from this area to come down to this demand zone. It's probably the move that I'm going to be looking at today.
You also see a disinflation on broader goods, because everything that's dollar priced, if I
coming in.
import it into any other country, that means I can buy more of it. Stimulates my economy at the same time as proving disinflationary.
So yeah, you just got to be patient. This is a nice area, nice 15-minute supply zone. So could be the case that we rebound here, come and test, come back down, come towards the 76.2, 76.1. It's not bad, not a bad target.
High interest rates in the US means that you get quite a lot of carry.
Got something between here.
That means you've got to take your money out of those money market funds, and that is
Pretty nice, nearly 5R.
money going out of that one spot of concentration and going all across the
Yeah, that's what we're looking at anyway. In terms of gold,
taking a break from Bloomberg Sportbox. Bloomberg Terminal customers can hear live breaking news from Eddie and the rest of his team just by typing Sport on the top.
Now it's time for the London Rush.
see, gold's not really anywhere. You've got this concentration right here. Just come down, it's tapped, but we're looking at potential tests and continuation again. There's going to be some positioning ahead of that interest rate decision next week. So this is really where we should be targeting. There's some stronger supply there. So rebound, breakthrough, come into here again. So
that is potentially a little bit of a spot of weakness. What they're also seeing is a little bit of weakness on the US as well, and so that is sort of driving the or or suppressing the company's
Now,
sales
it could
initiatives.
play out
The broader
two
story
different
here
ways,
there
yeah.
is that they've got a new management team. They've got a new
It's
CEO,
entering the range, as you can see here, top,
They've got Daniel Lee, who is a new
top,
designer last,
bottom.
in
So it could be a
November,
case they'll be
unveiled his
come
new
down, hold,
collection,
and then start
hoping
to
create a bit of a
change
sharper
and
background,
push,
but it is
or
just
make a
incredibly
little bit of an
stable
overextension to
sector.
this area
As a
here.
result, those
Okay,
China
tap for
sales
that
have been
stronger
very closely watched.
liquidity,
Treasury
and
shares
then
did drop a little bit at the
make that
open,
move.
but they've since sort of pared their game
So
back
you
again.
just got to be patient with it. Again, it's Friday. I'm not expecting anything insane to happen, but those are the levels that we're looking at. So either continue sticking, could overextend, push back in.
$2.9 billion from
Yeah.
their funds in the last 3 months
But
through to June.
the end goal really is that stronger supply zone, break through this high, and start making its move back up. You got this breaker structure just here, you see, breaker structure. So it's probably time to come back down. Yeah, we'll see. See how things kind of play out. Yeah. You alright, Casey? How you doing? But yeah, we sent all of these updates in last night.
Is one of those companies that most people will have never heard of, but I would almost say most people would have probably experienced something that they have produced, and they have produced some of the biggest.
We sent all of these in yesterday. Got a bit of our Bitcoin updates, oil updates, gold updates. But yeah, we'll see how things kind of play out.
Exactly. I know which of those I would answer. Stephen, I have you pinned down as a Fleabag kind of guy.
I've only seen some of it actually, but yes, very much big fan of Phoebe Waller-Bridge. So.
Yeah, exactly. And Caroline, of course, you've seen 1917, which was the cinematic masterpiece about the First World War. But look, what
Okay, I'm
ITV
in
is
my
saying.
box now, well and truly.
They're saying that they're going to continue to monitor.
What have we got today? We got bank earnings today.
To some extent, some of this feeds into the wider picture about entertainment. These strikes with the writers
So,
in America, as
it's
well
going to
as
move
the
markets a
strike
bit.
as well. That's potentially creating more of a
Apart from that,
negative
there isn't
maybe they didn't
anything.
details. Maybe ITV are thinking potentially now's not the time to make a big
Yeah,
decision.
it's just the earnings.
Earnings season's then heating up. So
It
maybe
is
it's
eating
got
up.
lots more.
Yeah, exactly. Ocado Group, the grocery delivery company, EasyJet, will get an insight into the low-cost airline industry, massive industry for the UK, and of course Glencore as well, who have in the last few quarters done extremely well.
Yeah, I'm going to keep an eye on oil just because that gold's going to take a little bit longer to materialize. This looks like it's playing out to the plan.
This is Bloomberg Daybreak Europe.
Whole financial services industry.
Seeing some nice buy side coming in.
Message to Russia is remove your troops now.
I'm determined to bring inflation down, and I'm absolutely determined to stick to the course.
We've got a recession coming, isn't it baked in the cake?
We need to send a signal that Ukraine will become a member of NATO as the situation allows.
Bloomberg Daybreak
Shall see, guys. We shall see.
And it's 8:30 AM here in London. Good morning. I'm Caroline Hepker.
And I'm Stephen Carroll. This is Bloomberg Daybreak Europe. Half an hour into the trading session here in Europe. We've got the Stock 600 flat to the downside at the moment. FTSE 100 is also flat, although flat to the upside makes a difference out of it. Caronte in Paris is 0.2% higher. The DAX in Frankfurt
But yeah,
lower as well.
those that are joining us via TradingView, welcome back. And I haven't been on TradingView for a while.
Healthcare is doing very well as well. Those are the still the better performing sectors. You know, other sectors trading up. Bottom of the basket, real estate and basic down about 0.8%. Wall Street futures now turning a little bit negative. S&P E-minis down by 1/10 as well, and we've got that sell-off across the bond space as well. The yields moving up all across Europe as well. 2-year gilt yields up by 5 basis points at the moment, 5.17%.
Okay, let's go to our top stories this morning for you. China's President Xi Jinping is signalling
You're not getting any real strong supply got a little bit here,
Officials have taken a series of
but it's still looking weak. So again,
for private and foreign firms. It comes as the Chinese central bank has signalled no
push
major
towards that zone would be nice.
Bloomberg's Jill Dices broke down what the PBOC
So just stay patient. If it plays out, plays out. If it doesn't, just move on to next week. I'm not taking anything crazy today. GBP, yeah, in 30 minutes, chart long price target 181. Let's have a little look then. GBP, JPY. I was looking at US dollar, Japanese yen. It's cooking. It's not looking too bad. Bear with me because I will go over that. Yeah, similar structure in all fairness. We got this slight change of character. So let's get rid of that. So you got this all the way down here.
Tricky, especially when you're getting close
Talking 181.
crucial point where you're fighting inflation. You haven't
What's
target, but there's a risk looming of
oh, you're just targeting a very small move.
a delicate time for central bank leadership.
Blacker also pointed out that Bullard isn't
Yeah,
the
I mean,
changing roles. The Australian government
I was going to say we need to look for a potential break from this area. So if you're just targeting up there, then yeah, it's most likely to come up and test that area. If we are able to break, come back down, retest for liquidity, then we can continue pushing back up. That would be a change of character.
Having honoured the independent pay review process, I urge all union leaders to accept these pay offers and call off their strikes. We will not negotiate again on this year's settlements.
Oh, shut up, Brishy.
Strikes will change our decision.
Junior doctors in England who started a 5-day strike yesterday have been offered a 6% pay rise. Teachers have been offered 6.5% and police 7%, in line with the recommendations from the official public pay review bodies. So far, teaching unions have said that they would recommend members accept the pay deal.
Those are our top stories on the programme this morning. Coming up next, we're going to be digging into more detail around the latest results that we've had from Burberry. So sales from a decline in sales in the America, a smaller than expected rebound in China, but challenges facing the British luxury brand at a time when they are trying to boost their broader appeal. So we'll be digging into that with Deborah Aiken from Bloomberg Intelligence next as well. Next, of course, the luxury sector too. So interesting to get Deborah.
So you got some demand there.
From here. Stay with us for that conversation. This is Bloomberg.
Got a bit of structure here, but
what is dedication?
The thing that drives me every day as a dad is Darian. We call him Day Day for short. Every day he's hungry.
it's not given an ideal entry right now.
And there's this huge responsibility in making sure that when he's no longer under my wing, that he's a good person. I want him to be able to sit there.
Entry isn't just here, yeah. The one that I was looking at was US dollar, Japanese yen though. Still have to wait a little bit, but you got this nice rebound. Let me get rid of this as it's gone.
We also have the unknown of how much can financial assets take.
We have something else in common.
The small caps continuing to feel the pressure.
We seek out the latest business news wherever we are.
The deep drop in Asian equities overnight.
U.S. futures also pointing to the downside.
So obviously you got this strong area here, right?
You're never completely ready to adopt a team.
The strong zone. So you had 1 test, 2 tests, 3 tests, broke, retest, and now you're getting that here. So wouldn't mind a rebound. Come and test one of these levels here. It's had a huge sell off, so might be time for a little bit of a pullback here.
To learn more about adopting a team, visit adoptus.org.
this is looking a little bit nicer. Obviously we got this high here. There's your supply. So you might actually be able to get in on an entry soon. So you got this area.
But we have faith in his killer instinct. Celebrate the 10th anniversary of famed detective priest Father Brown. Stream a new season now, only on Britbox.
It's loading up. You just gotta be patient with it, but come test and then make that push and break through here.
From Michigan.
You got this slight break here.
Lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing a day to fix the car to get to work doesn't leave us with much at all. Now we can't even.
I'll show a lower time frame.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by
Yeah.
Feeding America.
See whether we can come back to demand and then push right back up, and then we can start targeting a couple of these areas up here. You can just play that pullback, so you come back down, tap for that demand, hopefully reaccumulate, break through this structure, we'll play it, come back down, break through this, come into this area here, and we can just play it all the way to the top, to the strongest supply. But yeah, we just got to wait for that pullback, potential breaker structure. Once we get up and above this area here, that pullback will be very much in play. This is a nice nice area to target just here. So we'll see how things kind of play out. Again, not going too crazy today. Bank earnings is definitely going to move. Definitely going to move the markets. But hopefully we can get that dollar index continuing to pull back up again. You've got that gap left behind. So we'll see whether we can capitalize on that move. Those that are joining us on TradingView, well, firstly, thank you for the likes and thank you for the follows, very much appreciated. Please do bear in mind that majority of live streams that we do now aren't posted on TradingView anymore. Okay, so if you do miss the live streams that we usually do or usually did on TradingView, you can still join them, but just not via TradingView anymore. So please do bear that in mind. We haven't gone anywhere. We're still doing the live streams. It's just we've kind of stopped doing it on TradingView now. But yeah, it was a red day yesterday, unfortunately for us. It was, but overall this week we've caught some huge moves. Very nice oil move, something like nearly 9R on that one, 8.5R. Some very nice moves. Yeah, that was a nice catch. So yeah, still making some very nice nice trades. Can't complain. But yeah, yesterday was a bit of a rough one. Go ahead, makes sense. Probably fine.
Where we saw inflation cooling again, only 0.1% inflation on the PPI reading in June. That did help to propel the S&P 500 above 4,500 yesterday. Stock futures, though, are in the red, both for the Nasdaq and for the S&P now. In terms of bond markets, 10-year yields up by 3 basis points at 3.79 in the US, 4.67 for the 2-year yield. So also up by 4 basis points, although we've seen big moves in yields lower over the course of this week. UK gilt yields also rising 5 basis points at 518. German bond yields at 319, up by 4 basis points. So that is being mirrored, those moves in the European markets also. Bloomberg Dollar Spot Index, the other big story, it's up by 1/10 of 1% this morning. So we're reversing the declines that we saw earlier. Oil prices, looking at Brent crude futures this morning, they are down now 0.2%. Also the WTI crude futures. That is your Bloomberg Radio Business Flash. Let's get into the
USD JPY
the rest of our top
chart long 180, 138.55 target.
The world's largest agricultural commodities traders behind a move that is rattling the London cocoa market. The privately held US firm Cargill is buying large
Sorry,
amounts
15
of
minute.
cocoa on the ICE futures
Get rid of all this stuff, yeah.
Bloomberg understands the move has left traders scrambling to find enough of the commodity to deliver when
Yeah, where's your entry? Are you entering now? Where are you looking to enter?
US President Joe Biden is maneuvering around another China spy row to improve ties after recent diplomacy has done little.
We do need some sort of a pullback here.
On the 16th of June, the State Department reported unusual activity to
Or are you looking at taking an entry right now to push to 155? I mean, it could happen. It could happen. Just not really anywhere kind of strong. You got obviously this bottom here, but
are already in a relationship. As studies found around half of users aren't
I'd at least want a move down to here at the very, very, very least.
It's thought dating apps have become sources of entertainment and social connection, providing a confidence boost to people who receive matches. And here's what we're looking out for today at Bloomberg. Throughout the day, several US banks will report earnings, including
Thank you for the follows.
Citigroup and Wells Fargo. At 3 p.m. we get University of Michigan US consumer sentiment data. At 4 p.m. the Indian Prime Minister Narendra Modi is in France and will be meeting President Emmanuel Macron. And next week earnings in the UK really do start kicking off. We'll see firms including
Yeah, we gotta let it cook a little bit, yeah. It is looking good. This is a nice pullback. We got that initial breaker structure, so all that we're looking for is that change of character. Okay, so obviously we've had, so essentially the change of character has been very, very bearish, right? So it's been pushing back up, taps liquidity, continues back down, taps liquidity, again. So now all that we're looking at is that change, right? So we got the low, we want a higher low here, and then we want to break through here, right? And then it comes back down, and that's your change of character. So that's essentially what we're waiting for. But yeah, we got that initial lower time frame break just here. So the first step is in place. We just need that follow through now. So we can play it long at demand. But you gotta wait for it to come to demand here, because it's going to need the liquidity to make that move.
Very strong growth out of other South Asian countries, and we feel that for the Chinese consumer and other Asian is really highlighting some of the new spend in the market. Until
then, you just chill. Gold. Let's have a little look. Same thing with gold. You got to be patient with this one. It's within a range currently, right? It's building up on a slight top. Again, it's Friday. See how things kind of play out. Obviously, if the major banks reporting today miss earnings, okay, it's not going to be good news. So this should continue moving back up. So essentially what we're looking for is, I mean, we're kind of at the zone. We could either hold this range, so top, bottom, and then move back up, or come back down and actually tap this demand zone lower here and tap for that stronger liquidity. There isn't a whole low down here, but it's structure. But ideally you want to see if you can get a nice move here, a nice test for demand, nice reaction, then we can look at it potentially continuing back up. You're getting a bit of sell side here, got that little bit of a double top. So we'll see how things kind of react. But this is nice.
Okay. The new creative director, Daniel Lee, a collection is due in September.
It's not tapped it, so it could be the case that we make a deeper pullback as well.
There was an initial capsule collection in February just as a taster, and he's done really well to get a first collection ready for September because it's a year on. Generally it takes longer than that, so we'll be hoping to see today some of those numbers that are coming through, particularly from wholesalers, and how well those boutiques are taking.
Same thing for oil, really. Seeing whether we can push up towards a stronger zone for supply.
It also aligns with a big logo revamp as well. So
ideally,
back to the Burberry as we knew it,
be
but
nice.
in different ways with the new creative director and also with a relatively new CEO in place too. So we're hoping for good things, but we're a little bit in the dark.
Thinking a little bit more broadly about the results we've had out.
Hopefully it plays out.
Interesting to compare
Because
Swatch's
you
numbers and the market
got
reaction to them versus what we've had from Burberry today.
Yeah, so yesterday we had Swatch with 18% comparable sales. Today we've had Burberry 18%. Swatch
got this move here.
Across our sector yesterday. And what it's about, maybe 3 or 4 things. First,
see how we got this move here, and it just breached just above, bam, breakthrough structure. That's where your liquidity is all held now. So ideally that's why we're looking at potential entry. Play it out relatively nicely.
Growth in all regions, whereas for Americas, for Burberry, it was -8%.
So we shall see.
State the brand, elevate brand position and equity value to a higher base consumer to make it more of a luxury feel over in the US market in particular.
Yeah, I mean that is part of this kind of polarization, isn't it, in the luxury sector? Very, very high end is doing well, but sort of in the middle, it's much tougher.
It is. I think we saw it. We're getting through now. You know, as you said, those PPI numbers. We're starting to see some slowdown there on the inflation numbers, and I guess that will take a while to trickle through into the middle range and into buying brands in a consumer discretionary space. But we did have concerns for brands like Coach and Michael Kors and others who've struggled more recently in the US. Coach held up rather well, but Michael Kors has had some struggles. There have been others in the beauty side as well, high-end names in the beauty side where product is quite expensive to buy, or a relative value, a high price tag to purchase, and they've struggled. So we did have a view that with Burberry not being seen as truly luxury by some out there, it would fall in that aspirational space, and that would be a problem to it. It was the same last time, by the way. America's similar level the last quarter.
Okay, Deborah, thanks so much for your analysis. Deborah Aitken there, Bloomberg Senior Analyst for Luxury Goods, Beauty and Healthcare. Coming up next, we'll be speaking to our economist, Merryn Somerset Webb, about the latest edition of the Merryn Talks Money podcast. Stay with us for that. This is Bloomberg.
At PPAC Private, we know that dreams can lead to great achievements. And that path, from dream to reality, takes planning, hard work, and determination. Our wealth managers...
Yeah, you just got to be careful.
We're dedicated to
Come down to stronger demand.
While others dream, PPAC clients achieve. For advice in planning, investment management, and trust and fiduciary solutions, visit ppacprivate.com. Not FDIC insured, no bank guarantee.
You got this down, yeah.
To keep up with breaking global business news. It was a mixed day here in the States.
Volatility is sky high.
But at Bloomberg, our seasoned reporters and anchors make it look easy.
Yeah.
A fresh record
Yep. Got unlucky on that Euro Australian dollar yesterday because it came down perfectly to target that 200 on the daily. This is also looking pretty good. See how we got that double top here. Come and test, see whether we can get something on the lower time frame in terms of heading towards supply. Let me just take all of that stuff out for our So
Brought to you by AARP and the Ad Council.
The Bloomberg Business of Sports podcast, where the money is flowing inside sports around the globe. It drops knowledge on the
get rid of this.
The latest on the PJ and Live Golf Tour.
Who's the next
It's coming into that zone quite nicely. I like it.
and Damian Sassauer take you inside the decisions that power this multi-billion-dollar industry. Balance of power in F1 might be shifting. Bloomberg Business of Sports. Subscribe today on Apple, Spotify, and everywhere you get your podcasts.
Might get a decent rebound.
This is international business. The same goes for business disputes. That's why the International Center for Dispute Resolution provides a faster, more efficient approach to dispute resolution across borders. Backed by the American Arbitration Association, the ICDR is the world's leading provider of dispute resolution services. Find out why global expertise matters. Visit ICDR.org.
Wherever your business takes you, Bloomberg Radio is here with you.
Breaking economic news crossing the Bloomberg.
Powered by 2,700 journalists and analysts.
Let's get to some of the day's gainers.
In more than 120 countries around the world.
We are seeing a flatter picture for European stocks this morning.
We're the only 24/7.
See whether we can get something in here. We got these two big moves.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Business Week podcast, a conversation with Rachel Gehring, EY America's IPO leader, on the current state of the U.S. deals market.
Well, it's definitely
Got that retest there.
we're not packing up and taking long
But yeah,
by any means. There's
came down perfectly to that target on that higher time frame.
and planning to IPO when the market's right for them, but there's definitely very much a wait and see atmosphere continuing. But we're hearing good news even today that hopefully will just help build and continue building some momentum that we need to see.
We'll see. It's Friday, so gotta let it do its thing.
This market has been fantastic. If you look at the gains
It's happening here. Looking a little bit dangerous.
Jones are up this year as well.
Looking a little bit.
Well, I think there's a multitude of factors, and some of
It's not really rebounding off anywhere.
investors are willing to
Do
invest in the asset class, but not at any price. So there's still that
EU and GU reversal day. It looks like it. It looks like it. That's what we're looking at. Seeing whether we can continue back up. Obviously, it's been on an absolute rampage. So we'll see whether we can come back to demand. So we'll see how things kind of play out. It's a nice structure. It could be the case that we build a head and shoulders here. So we'll see how it kind of materializes here. Can you please show your entry SLTP? Yeah. So it's exactly as you see here. Okay. Let me read it out for you.
Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Live in London on DAB Digital Radio.
So we got SL 1.1244. Just at the top. Okay, you gotta give it the room to materialize. Okay, and actually make that turn round. TP 1.1163.
Good morning, welcome back to Bloomberg Radio. I'm Caroline Hayes.
Stephen Carroll. Let's turn now to this week's Merrin Talks Money podcast. From mortgages to salaries to savings, it all comes back to inflation. We've got Merrin Somerset Webb with us this morning to tell us a bit more about the latest episode of the podcast. Merrin, great to have you with us. Your big guest this week has a surprising prediction. Surprise us.
I'll surprise you. Okay, inflation is going to go way
But yeah, we'll see.
That's the prediction of Brian Pellegrini, one of my favourite American analysts, and he particularly looks at the US market. And we did talk actually before those inflation numbers for the US came out yesterday. So he was right on track. And one of the things he says is that the transitory bit of inflation has now travelled through the snake. We're kind of out the other side. Inflation's now going to come down so quickly in the US. He says it'll almost scare the Fed because they're not quite ready for it. So that bit is done. In the UK, obviously inflation is still remarkably high,
Yeah, hopefully bank earnings today play to our favour. That'll be nice. It looks like we're getting a bit of a rebound, so we've got that gap left behind. Okay.
Okay, what does it mean for people trying to save money then?
Well, in the UK, if you're saving, you're in a slightly better position than you were before, because you are finally getting some actual return.
See whether we can break through.
Well into the 4-5%, so that's a good thing. But we may move into a period, and I say may because we haven't seen this for a long time, where for a short period at least, you may be able to get more on your savings than inflation. You may actually be able to get a real return on your savings. No promises here, but there's a possibility of that. The Bank of England in particular is likely to overshoot in terms of putting interest rates up slightly further than they need to, because they've got to strength there. So there's a strong risk that they will make a second mistake.
Might be able to get in on a short. You got this concentration here. I might be looking at taking a short here on gold.
Australia, when Philip Lowe's term expires in September, the Australian government decided not to reappoint Lowe after criticism of the central bank's performance, and an independent review recommended major changes at the institution. Philip is currently deputy governor and will become the first woman to lead the RBA.
See whether we can get some supply coming in. There you go. Right, I'm going to take this short. We'll just target this this area here. It could be the case we move a little bit lower, but that was a nice test. See whether we can break through this structure here on the low time frame. That was a very nice test of that supply area. I like it. Just need to break through here now. We also got a test on oil. I'm going to take this oil trade as well. it.
press conference that they intend
I hate when it does
to
this
have
shit.
twice more before calling the cycle over. Now, the markets read way through the tea leaves when it came to these cooler than expected inflation prints this week, both CPI and PPI coming in cooler than expected, and the markets are believing that the Fed has really just got one more hike to go and they're done. But when it comes to how the Fed is going to communicate that they have reached the end of their tightening cycle, they're really not going to let up on this hawkish bias, on this hiking bias, until they're absolutely sure the next move is a cut. So I continue to expect to hear these same kind of lines. It's almost a threat of a further rate decrease in the fall to be really left on the table for the Fed until they're absolutely sure that a cut is coming in the next month.
Because so the Fed wants to keep that optionality, the availability of that, not to rule it out. But at the same time, markets are busy asking, well, is it one and done? Are the Fed going to hike in July and then stop? Is that how substantial, how significant the data was this week?
Very significant, and it was down to.
We'll look to add some units at this area, so maybe we can come right back now.
Within the sticky components, we're seeing inflation fall, and those components are really key for the Fed because in those sticky components, once they start rising, it's really hard to get them to turn around. And if you look at
This is mitigated.
it would tell you would need the labor market to weaken, and unemployment.
Just this area here should hold.
You'd see these sticky components of inflation start to turn around.
Fingers across.
Already starting to see inflation let up before we get any labor market weakness, letting many to believe that this sort of narrative that the Fed can get away with a soft landing, that maybe in the long term inflation was transitory, is really starting to bite.
Transitory, but over a longer period.
And the market came to that conclusion quite swiftly this week. You see it in the dollar softening over 2%, equities climbing 2.5%, and then yields in the bond market, treasuries plummeting around 40 basis points when it comes to the 5-year yield, nearly 30 basis points when it comes to 2-year yield. So maybe the market's getting over its skis, but not a lot of good information this week. So I think they're just positive on the trend ahead.
No, I also think it's hugely important about that inflation and rates trajectory when it comes to bank earnings. We've got JP Morgan, Citigroup, Wells Fargo reporting the latest pay in the US. So on that though, let's bring in our finance manager editor, Tom Metcalf, for more. In terms of the outlook for banks and the changing backdrop that's facing.
As you can imagine, we've got a very, very busy day and lots of big banks reporting. And, we've had, the sort of regional prices now somewhat in the rearview mirror. But what they've been looking at is, in the more sort of retail banking side, how the US consumer is doing, what the provisions are there, are these banks able to continue to sort of make big profits because of rising rates, or are they now sort of under pressure to sort of return to the retail savers? And then of course, on the trading side and the investment banking side, is trading still holding up? And the investment banking side, is there any business being done or?
Yeah, it's interesting on the savings side and what pressure they're under there, because there's a sort of an interesting timing mismatch, isn't there? That they come under pressure as rates rise to pass on higher rates to savers, but at the same time, if they look at their loan book, they can't suddenly ratchet up the rates they charge on all those loans that they've had over years and years. So that's an interesting dynamic maybe to explore. But I know that also costs very much in focus, and the way that these banks are able to keep a lid on costs in what has been in the US an inflationary environment.
Yeah, exactly. And we've seen a lot of those banks come out with pretty sweeping cuts, thousands of job cuts being announced. And that will be another thing to look out for. Will there be sort of guidance on costs, just read probably more headcount cuts, or do they feel they've done enough there? And again, as a shareholder, that is all you're focused on. That's the bottom line. So they'll probably respond very positively if there's sort of more guidance on some of those banks.
What about, I suppose, a fallout still from obviously the credit squeeze? Has that changed things?
Yeah, look, the industry has absolutely changed because of that. I think on the Credit Suisse side, it's perhaps to be seen as almost good news for some of these US banks or big asset banks and trading side. And it depends, of course,
Holding on to that resistance area.
I think on the SVB side, that really did affect the US finance world, and where we're seeing the impact already is on the regulatory side. So you have those
Seeing that supply coming in here. Go. Right, I'm going to add some margin here to euro dollar. Looking good. Commodities looking good. Alright, I'm getting gold stop loss to break even. Got that initial break of that structure just here now. There's your BOS. Happy days. Same thing here. Okay. Moving oil stop loss to break even. Happy days. Alright, 2 out of the 3 trades are risk free now. Obviously we added some units on euro dollar. Those units are coming into profit here. Okay, so we'll see whether we can continue coming down, but we're looking good, we're looking good, we're looking good. Hello guys, how you doing? Hello my man. looking good. Okay, as mentioned, 2 out of the 3 trades are risk-free now. It's followed structure perfectly. So let's see whether we can run to TPs and start really breaking through some of this structure here. This was a very nice supply dump here, as you can see here. Nice increase in supply. Okay, we broke through that initial structure just here. Okay, maybe we come back up ever so slightly. In fact, what I'm going to do on oil is I'm just going to move my stop to just above there. Okay. See whether we can break. It might be the case I don't even need to do that. Here you go, we got that slight turnaround, yeah. But yeah, gold's looking pretty sweet. There we go, there we go. 1957.5. Right, gold stop losses at profit. Okay, oil's coming down very, very nicely as well. Okay. See how well it goes. Looking good. Yeah, looking good. Now, there is a little bit of supply here, as you can see. Hence why we've just set it just above. It's not going to be a whole load of profit, but it's in profit, so you don't need to worry about making any sort of loss. The only thing with this one is same structure as gold really, but that's where your demand, which is break even. Okay, so the entry wasn't as juicy, but we'll see. We shall see. Why not trading stop loss and only standard stop loss? I like to manage my trades. Okay. So yeah, I don't really set trade-ins. I just like to set it to the levels. Okay, I go off liquidity zone, so once it breaks through a liquidity zone, it's mitigated it, then I'll set my stop loss as it goes. It's whatever your style. If you like to set your trade-ins, you set your trade-ins. Makes sense, makes sense. Yeah, it's whatever you're used to. If you like using trading stops, then you can use trading stops, but it's not going to take into account where the liquidity is at. If the move runs out of liquidity, it's going to have to tap back up. At least that way, if I know, okay, here's my liquidity, here's my supply, okay, I know, right, I'll set my stop loss just above it, or there's liquidity up here, right? It could very much come tap and then come right back down. Well, if I had a trading stop, I'll get tapped out before it taps liquidity, right? See how we come here, tap liquidity. So it's just easier to go from zone to zone. Once it comes and taps and creates this high, so here's your structure, creates a high, right? Once this is broken here, then you can move the stop loss, right? It breaks through structure, comes back up, set. Your trading stop loss isn't going to take all of that structure into account, right? At least we got some movement in our direction. Let's see how it kind of materializes. We shall see, guys. We go up and we go down. Come on, gold, play on. There's been a lot of squeezes on gold, a lot of squeezing. This huge candle here is just, I mean, you've been getting it left, right and centre really, but this, look at that, all the way to the top, all the way back down, all the way back up. It's been squeezing out traders left, right and centre. There's been a lot of repositioning ahead of next week, especially after those inflation figures that came out this week. So gotta be a little bit cautious here. nice tap of that area. See whether we can continue moving in that direction.
Easing off on both the 2-year yields and 10-year yields in Europe and in the United States, and the Euro Stock Index is flat to slightly softer this morning.
Okay, let's get to some of our top stories, and we start in China. China's President Xi Jinping is signaling greater support for the private sector as the country's post-pandemic recovery struggles. After years of regulatory crackdowns, officials have taken a series of high-profile steps to telegraph backing for private and foreign firms. It comes as the Chinese central bank has signaled no major stimulus is to come. Bloomberg's Jed Desis broke down what the PBOC's main message on monetary policy was.
In terms of indicators, I've just got volume and moving averages. So my moving averages are set 50, 100 EMAs and then a 200 SMA. Apart from that, I've got nothing else. Don't really use indicators that much. Can we hold? That's the question. Can we hold? Come on. So in terms of Fibonacci's, right, so let me go back on the one that I put it on. It's just to add another layer of confluence, right? So obviously we have this move here, right, if it plays out. So you can use that either way, right? So got this move down. Now I'm looking at, okay, where could we find a pullback to, right? So now you have to layer your confluences, right? So your supply and demand, your liquidity zones, those are going to be the stronger areas, right? So that's what you do first. Then you can add your Fibonacci on top. Okay, see whether, okay, is it lining up with any of these supply and demand zones? At the moment, obviously, we've got that 786 and that 618 up and above. Okay, that's a supply zone. Okay, we also got a little bit of liquidity at the top here, so it's just as an extra layer of confluence. It doesn't always hold a lot of strength, the Fibonacci's. Okay, so that's why you kind of just tend to go off the the supply and demand. things are taking a little bit longer to materialize here. So I've got double top on gold. Up and down, up and down.
Sterling now shooting up.
Accessing the world's latest financial info news.
Central banks fight to tame inflation isn't over.
Wake up with Bloomberg Daybreak Europe Edition. Available now on your podcast feed each weekday morning by 7 a.m. in London. Get the news you need to start your day in just 15 minutes. Subscribe to Bloomberg Daybreak Europe Edition today on Apple, Spotify, everywhere you get your podcasts.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This
Yeah, supply and demand, then Fibonacci. Your liquidity areas are always going to hold a lot more strength than your fibs. Your fibs are just as a kind of extra confirmation. It's not, you shouldn't put too much strength on a fib. Price action's horrible, man. I'm gonna look up what's happening with crypto. You getting anything? It's down. Nothing major. Right, we've closed the oil at break even. Let's stop that. Trying to think where we can potentially look for a re-entry. Should have stuck to that area and got that initial break. See how it reacts here this week. No problem, mate, no problem. Okay, we got that bit of a top forming. See whether we can continue. Yeah, we'll stay out of oil for now. Right, okay. It's looking like it's going to take a little bit longer to materialise both of these trades that have been left open. So I'm going to end the stream here. I'm going to continue managing the position. So those that are with us, I'll update you on any changes to the 2 trades that we've opened. Yeah, amazing. Those that joined us via TradingView, just bear in mind the next stream, the stream for the New York opening session won't be on TradingView. Okay, and I mean we'll probably just do one stream on TradingView a week. The rest is going to be elsewhere. So please do bear that in mind if you want to follow through into the next trading session. Yeah, you should be able to know how to do that. But yeah, amazing. Thank you very much, everyone that liked and followed. Amazing. It's always a pleasure. Yeah, hopefully we'll see you for the next training session. If not, enjoy the rest of your Friday. Enjoy your weekend. And yeah, we'll see you some point next week. Okay, thank you.